Hi students, welcome to Flip School, your group coaching call on Fridays. Today is November 3rd, and I have a very special guest with us. Today we have Vanessa from Boomerang Capital. They are a local lender here in the Phoenix area. And guys, if you are seeing what's happening in the market, I'm sure you have the questions that we're going to be asking Vanessa today. And it's so important that you stay up to date on what is happening in the lending world, because that's going to directly affect you as a rehabber, flipper, landlord, whatever your exit strategy is after the rehab. These are the sort of calls, connections, and conversations that you need to be having right now so you can plan ahead and look into a crystal ball of what's going to happen over the next 4 to 6 months as you have this house under rehab. That all being said, Vanessa, I'm so excited to have you on this call today. Do you want to do a brief introduction?
Yeah, of course. So thank you for having me. I'm excited to be here as well. I love adding value to people who are either getting started in flipping or are flipping currently right now. Yeah, I've been with Boomerang now since July. So I am fairly new to the hard money side of it, but I've been in lending for several years with traditional banks. I got tired of telling people no. Transitioning into hard money and working with investors like myself as well has been a really good transition, and I'm really excited.
So that's actually a value add that you have a background in more traditional lending. So you see things through a traditional lens and through an investment standpoint. And I'm sure, especially being on the traditional end, you have a sense of conservatism baked in. So you can also have that bit of guidance and the some of the things that we'll be talking about that's really important for flippers, especially new rehabbers, to understand right now. So let's just dive into the question that I get all the time is now a good time to keep flipping? A lot of people ask, the market's not going up. If you don't, know the numbers dialed in, and I have never done a flip before in my life, are people still doing this?
Great question. Yes, people are still flipping. I always see an opportunity for flips. There's always going to be distressed properties. There's always going to be people in a hardship position. Unfortunately, there's always people that end up passing away and can't keep up with their homes. Right now we're going through a huge transition where the baby boomers are in retirement or wanting to retire, and they don't want to keep up with their rental properties. I always think there's a market for flipping. Now, with market changes, you have to be, a little bit more conservative or get creative. But yes, I mean, just to be honest, I'm closing about 4 flips today as we're talking. Did about 7 million last month. And that was even kind of a quiet month last month. So yes, people are still flipping, and it's still a good time to flip.
That's not, yeah, and that's no small feat. So we're just in the first weekend or the first week of the month. You're closing 4 flips today, and we're considered one of the most competitive markets in the country. So you guys are hearing it straight from the lenders that are seeing this every day. Flipping is still very well and alive. So let's get into the nitty gritty. You said something that I think is worthy of spending some time on, which is, hey, being more conservative,
Mhm.
going to what I'm hearing is very motivated sellers, which this is what I teach in flip school. We're looking for those needles in the haystack. Not everyone is going to want to sell their house. Very few are going to want to sell at a discount, and very few are going to want to work, with you as a rehabber to buy at such a steep discount that it makes sense for everybody. So we're really looking for the minority, which is high motivation, right?
Mhm.
So, as a lender, if I'm coming to you, let me just ask it like this: what are you seeing that's different as far as from a lender's perspective on flips than maybe a year and a half ago before things really hit the fan in, May, June of 22?
ARV right now. I'm having a lot of conversations with investors, that are coming to me from whether they find a property themselves or they find it through a wholesaler, and they're saying, this is what I'm predicting to sell the property at. And I look at that number and then I start comping it and I say, well, let's take a look at these things. These certain comps are a little too far out. These comps were done last year when the market was completely different. So I am right now is focusing on about 6 months. So I'm going back 6 months, and I try to keep all my comps within about a half a mile. Now, there are times where, things like that can be adjusted a little bit, and your spectrum can get a little bit bigger. But right now I'm finding it that it's best to keep it tight and to let the flipper know, hey, this is what I see. You might have a higher ARV, but if you believe that ARV to be that and you think that you can sell the property at that price, then I might need to ask for a little bit more down to make it make sense. But conservativeness, just like you mentioned right now, just because the market has changed and prices aren't as high as they were last year. So they, not that they're low, they just kind of mellowed out, and we need to be conservative on that part.
That's a lot of what you see, and I love that we're having this part of the conversation because I love getting into the nitty-gritty. And when I'm talking to my students, what I say is, listen, especially if it's a newer home track, and I'm talking, 2000 and up, start within the same subdivision, in fact, because you're going to have model matches. Especially if you're in a condo or townhome, then it's a no-brainer. But if you're talking about a single family home, start with as tight of a radius as you can. And if that doesn't produce 3 to 5, keep backing out until you get to that. I don't like, similar to you, if I can stay within a half a mile, great. If I have to go up to a mile, even better. Or not, that's fine. But what's even better is staying within a tighter radius, because I think it's easier to present to private money and hard money. And also it's more realistic in terms of what you're most likely going to get. Also to that, one of the bigger threads that my students see in flip school is not being emotional and wanting something to be there versus if I am thinking like a lender, which is the first lesson I teach to talk to people exactly like you and have these conversations, Vanessa, is what justifiably can you hand to an appraiser to say, this is the value that I'm planning on selling this at? And they will say, yep, I'm going to find the exact same data, maybe some new data, once you're finished closing. But I would be able to present this to a lender and to an appraiser and say, this is what I'm substantiating the retail value to be based on this. We don't flip on hope. We flip on data.
Yep, absolutely. The numbers don't lie.
The numbers are there to help us. Moving into, okay, so we're being a little bit more conservative now. Let's walk through a typical deal as if I'm a brand new flipper. Can you walk me through what that looks like?
Yeah, absolutely. So first thing I ask them is that they have experience flipping. It's not a make or break for us at all. We deal with first time flippers all the time, but I always like to kind of see where their head is at, what they've done in the past. Maybe they're a contractor. Maybe they've worked with people in the past as partnerships on other flips, and this is going to be their first one on their own. But I like to kind of get a general idea of their experience, just so I know what level that I'm going to be talking to them at. And obviously, I ask for the property address. The three things that I always like to ask is the purchase price, the address, and then what they are expecting to put in the property for rehab. Because that number for the rehab is going to give me a really good idea for how much work is going to be put in and whether my ARV is going to be at the max or if my ARV is going to be kind of mid and standard. So those three things I always like to ask for, just for numbers. I'm a numbers person, so the numbers come first. And as I'm typing those things in, then I'm starting to look at the property itself. I'm starting to kind of pull comps while we're talking, and they're telling me what they have planned. Are they adding any square footage, things like that, or what they see for their vision as an investor. So that's kind of where we start off with the conversation.
How does that conversation go in terms of what will your loan look like? How much do I have to bring in? If I'm a brand new, this is my first one. And how am I coming up with the renovation costs, or do you guys cover that as well?
Great question. So I always like to give two options. We do have the ability to cover the rehab if the borrower wants or needs the rehab. If it's an $80,000 to $100,000 rehab job, we have no problem lending towards the rehab. So what we do if we're doing rehab is we take the purchase price plus the rehab, and we will lend 85% of that. So they'd be coming with about 15% out of pocket. Now, if the borrower wants to cover rehab, or maybe they're a contractor themselves and they're like, I don't need the rehab funds, it's only going to take me, 20 to 30,000, I can cover that, then we can go as little as 10% down, which is probably one of my favorite ways to get people involved, because it takes a little bit of money up front and it saves them, and it gives them the ability to put a little bit more money into the rehab itself.
And are your loans, will that be reflected in the difference in your interest rate or the terms, or those two programs? How are your clients deciding between the two? I would imagine that the out of pocket is the main driver, but is there a difference between the interest rate that they might expect to pay when they're choosing?
Interest rate's going to be exactly the same. So in Arizona, we're at 11% right now. So with their origination fee and the interest rate, that's going to be standard regardless if we fund the rehab or not. So really what I think people are looking at right now is I always send them, both scenarios when I send numbers out to people or I'm going over with them. And I always let them know if your rehab is going to be 50,000 or less and you have the ability to cover that because it's going to save you some money up front. If it's a bigger job, you're going to need a lot more rehab and you're looking into the 80 to $100,000 for the rehab. I say, hey, let us fund it. Let's save some money in your pocket so you don't have to fork out a bunch of money while you're doing the rehab. Let us fund it for you. And then we can set that up.
That's great. So with the down payment and the out of cost, let's say I have that $40,000 rehab and I'm also going to be bringing in, the percentage for the down payment plus my closing costs. I often have students ask or people ask, well, how are people funding that portion of it? Now, some lenders will allow private money second, some will not, or they're just like, it just has to be in your bank account of the LLC that's closing on this. We don't care where it's sourced from, but you can't have a recorded deed on this. How are you seeing brand new flippers fund the portion that they're expected to bring in?
So we have a couple different options. We do ask for proof of funds. So we want to at least see that they have the ability to afford the down payment. We are okay with like a line of credit to show that they have the ability to take that funds out. We are also totally okay with a family or close friend showing those funds for them, and or a partner. If they're going to do a joint venture on the deal, and just say, hey, between the both of you, can you guys both have the funds to do that? And we also do accept the ability to have a second as well. We may ask for a little bit more money down for that second, but as long as we're in first position for us to protect us, then we're okay with asking for a second. We try to be as flexible as possible.
That's great. So for the uninitiated, what we're talking about essentially is creative ways of being able to get yourself into flips and also gap lending. One of the things that I talk about within Flip School is, listen, if you don't have all the money yourself, but the numbers make sense. So you're going to hear a theme throughout this conversation, which is numbers, 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 numbers. If those are juicy enough, the money is not the bigger driving force. It's you being able to get out into the marketplace and saying, who makes most sense to be a partner for me with this? Listen, if I'm a contractor, and I can bring in my trades, I know how to do this work. I don't need hand holding as far as the process, but I don't have all the money myself. That JV conversation might look a little bit different than I just happen to find this really great deal. I don't know about rehabbing. I need a partner that's a little bit more involved, and I'm willing to split this, 50-50 or 60-40 with them having the upside for the opportunity to learn, but then also to get myself into this deal and make a little bit. I always think that it behooves people to think outside of, well, I need to make all this myself, or if I don't have all the money myself, then I can't do this deal. That's a really limiting belief. And a lot of us, the one thing that's really important to understand for those of you that are brand new or have done a couple deals or are in the middle of a few deals, us experienced investors have to use the same methodology to raise capital at some point in our careers and throughout our careers, because none of us just have a superfluous amount of money that is never ending, right? And even if you do have quite a bit of money raised, you typically go out and are putting it to good use. So guys, just be open to thinking outside of the box of, if I don't have all the money in my account right now for my own doing, then this deal can't work. That's a really limiting belief. And a lot of us entrepreneurs have to constantly raise capital regardless and think creatively. So thanks for talking about that, Vanessa. So as far as what investors that are still in the marketplace, it's a lot of us that have, experience, that have maybe seen the market turn before, but a lot of investors have not. A lot of investors that have just enjoyed this 20% month over month appreciation and thinking that, they're God's gift to real estate. It's easy to think like, I am such a genius when I can do no wrong and I've made all this money. But for the investors that are newer, or maybe that just have not seen things change, what are you guiding or giving them feedback to pay more attention to right now?
The biggest thing I would say would be just to be extra conservative, like we were talking about before with the market. If they sell their property after they're done flipping it and they made more money than what we initially discussed, great. But I want to make sure that when I'm looking at the deal, that I am giving the best advice that I can to the investor as well. Because at the end of the day, if they don't make money, we don't make money, right? and I want them protected. I want them to come back. And as a lender, we don't want the property. We don't want the investor to default on the property. So when I have these conversations with them, I'm, being completely honest and saying, hey, these numbers either don't make sense or these numbers are great. Let's move on it. This is what we can do. And I essentially like to just be a second pair of eyes on the deal and let them know if this is a good deal or if they need to go back and say, hey, renegotiate, see if you can
Yep.
get it for a little bit cheaper. So
Absolutely. So with that, when people are getting into flipping and rehabbing properties, there's the old formula of has to be 70 cents on the dollar minus the net of repairs. And then that's what your bottom line is going to be. And formulas, I think, are helpful to some end, but there won't necessarily be applicable to every end because you're going to do a lot less deals if it has to meet that down to the penny. So what are you seeing as a healthy discount right now that flippers are still able to make enough of a profit that it makes sense for them to take the risk in a changing market?
70%. So 70 cents on the dollar is what I'm seeing right now, what I feel comfortable with, and what I think that would make the most sense for everybody to win.
Right. So that, guys, for those of you that have never done a flip in your life or what Vanessa is talking about, or Vanessa, would you like to explain exactly what I mean or what we mean when we say 70 cents on the dollar, what that breaks down into as far as purchasing price?
Yes. So what we do is we'll take the purchase price and the ARV, and as long as it's within 70% loan to value, then we're good with it. So it's a little bit of math and a little bit of formula, but it kind of gives us an idea for where we're at when it comes to the profit margin.
Yes. So we need at least 30% in the equity the day I sign that contract for me to know, regardless of, maybe the budget going over a tiny bit or my ARV slightly, either staying exactly what I thought it would be. Like Vanessa said, if it goes up, fantastic, then that upside is to your advantage. I don't want to hope that one house that is a mile and a half away that sold 9 months ago and I get dollar signs in my eyes is what I need to base my formula on to make, a small profit on this. What we do is a lot of hard work. We deserve to be well compensated, but you have to buy right such that you're taking everything that can and will happen within that your production time and also with the market changing to be able to absorb that. So 30% discount is par for the course. That in mind, one of the things that I want to highlight on the resale side that I'm encouraging my students to do right now, and I'll just go through a few of these. I sent a training out last week in our private group, was underwriting as if you're assuming that you're going to have to pay for some sort of rate buy down or concession for your buyer. If you were staying in an entry level price point, which used to be $200K, that is long gone and we'll never see that again. But now it's, let's just say around 400 and under. FHA buyers have come back into the market quite a bit as well. Now, these people are using subsidized down payments, down payment programs. They also might need to have some of their closing costs covered. Any repairs that might need to be done during inspection might be minimal, but still, my point is people will, if they love your house and it should be the best looking house on the block, I am underwriting things as if I'm going to have to help them out a little bit somewhere, whether that's a rate buy down, whether that's a little bit more in concessions. I am just putting in at least like $5,000 as if I'm going to have to provide them something during the closing period. So if you're connecting with a retail lender to say, if I can get if I can get the payment down to this amount at this price, what would that cost me as a seller to be able to provide? And that's something that I'm encouraging my students to put in the MLS right now, because a lot of payments, like Vanessa, and you saw this in the traditional side, do people care more about the retail price or do they care about the monthly payment, what's coming out of their pocket?
Monthly payment.
Right. So to that end, if you can make an attractant on the retail side to say, hey, as I'm underwriting this, I'm about 70 cents on the dollar. And that also includes me giving some concession to the buyer. I think you're adding in even more wiggle room and a safety net and also an attractant for you to call that buyer that's like, listen, I'm in love with this house. I want to buy it, but the affordability is a factor right now that can't be ignored. We don't know if interest rates are going to go up a little bit. We don't know if supply is going to continue to dwindle. Looks like we have a little bit more supply coming to market right now. Things are sitting on the market. There's some seasonality to that. But in terms of volatility, when it comes to flipping, we want our average to be about 120 days. Loans are typically around 6 months, to a year, but let's just say 6 months. But if your average is like 4 to 5 months, we as investors, as rehabbers and flippers, are taking on a little bit more risk with lenders like you to be able to semi predict what we're expecting next quarter, right? So, what are you as lenders doing to sort of absorb or expect any volatility in the market? Because you guys have to think even more strategically than we do at times because you're taking on a risk as well.
Yeah, so when we start talking a little bit more in depth for the time frame on what they think it's going to take to put into the work, also along with how long they think it's going to sit on the market, I always ask them, if this property sits for a little bit longer, do you have the funds to be able to do an extension? Because we do offer an extension. Like we want to be as supportive to the investor as possible. So we know that things happen. We know sometimes rehab takes longer. We know sometimes properties sit on the market a little bit longer. I always like to let them know we have an option to do an extension if we need to have that buffer for the investor to be able to have that property sit for a little bit longer. So we do have options.
Hmm. And there's two rules in flipping that we always remember. It's going to take longer and cost more than you guys think. That's always. We have our spreadsheets, we have our breakdowns, we have our buffers. But regardless, guys, this is not, it's not the most difficult of businesses, but it's always going to take a little bit longer and cost a little bit more than you think. So I'd like to put a little bit of a package on this to also say, and this is something that I teach my students as well. Again, thinking like a lender is the very first module when they log into Flip School. It's not, hey, what color is your website going to be? Or, like, what's the name of your LLC? We don't care about that. We care about people like you and how we can build relationships with our lenders that we are and look like professional rehabbers. So we make money together. With that, I encourage my students to always have these sort of conversations to say, hey, Vanessa, what do you think about this deal? I'm looking at these comps. Here's what I think it needs, but I'm a brand new flipper. I've done one deal, or this would be my first. And then relying on you guys as a partner to be able to also give some guidance. Do you do that with your customers, or what are you seeing right now as the market has shifted a little bit?
Absolutely. I, for one, love working with first-time flippers. That is probably one of my joys because I feel like, one, we can learn from each other.
Mhm.
And if I can build a relationship from the get-go and we can be a team in this transaction, they're going to keep coming back to me, which of course I want. But I feel for me, when I first got into my first flip, it's super intimidating. And sometimes you talk with people who use these big words, who assume you know everything and think that it's the easiest thing in the world because they see it and do it all day.
Yeah.
But I always like to take the step back and remember the first time that I did it, the first time I got into this business, and walk people through the process for it. So I love working with first time flippers, and I think it's a great way for us to learn from each other and also break down the scenario for what they see, what the market looks like, and what I see from my side. And I love educating people on the lending side of it as well.
That is super refreshing to hear. And that is the first assignment that the students do in Flip School is to actually take the 2-page spreadsheet that I have for them and call lenders. And I cannot tell you that they're so nervous to reach out to lenders because of the reasons you just said. And then it's also a confidence booster once they go through that exercise because they're like, wow, they actually took me seriously because I asked these questions that I never knew how to ask before. And it helps develop that relationship. So let me ask you from a lender's perspective, if someone calls you and they don't have a deal or a contract on the line, do you still talk to people like that, or should they always just wait until they have a contract?
No, I feel if you're wondering and you want to know what it's going to look like, if you are trying to be 2 steps ahead of the game, it does not hurt to call a lender and say, look, I am in the market right now. Because guess what? I might know people and wholesalers that have a deal that they may be interested
Mm.
in as well. I have a lot of connections. I deal with wholesalers and brokers and investors all of the time. So them calling me and asking me, hey, what do your terms look like? What if I bought a house at this price? What am I looking at the down payment? I have no problem going through my spreadsheet together and saying, hey, let's do a scenario together. Let's pull up something on, let's pull up Zillow or Redfin real quick and let's do a pretend mock-up together so we can see what it would look like.
I love that. And that's the same reason why I say, hey, reach out to these lenders because you don't want to be putting a contract together, doing back of the napkin math, thinking that that works, and then calling lenders and finding out your money is going to be a lot more expensive. They don't allow seconds if you don't have all the money. And then you look unprofessional in front of the seller and maybe in front of your, the other associates that you have involved. So I agree with you 100%. Reach out before you need the money, get an idea of what that looks like, understand your breakdown. So when you're putting those contracts together, you look more professional for everyone and you can close with confidence as well.
Yep, absolutely.
So I love this conversation. This is being recorded in November 2023. So as things evolve, I think it's important to always keep reaching out to lenders. How can people contact you, Vanessa, and get in touch with you to have these sort of conversations?
Awesome. Well, I keep my phone on me 24/7. I'll tell you this. So,
No
you
one
guys,
text or call Vanessa at 2 a.m., okay?
not 2 a.m. Yeah, yeah,
Let's
yeah.
keep it reasonable.
I'll put my phone on do not disturb if that's the case. No, I'm just
Right,
kidding.
right.
But my cell phone is on me all the time. I love sending people comps when I'm out and about. I have no problem taking a phone call anytime. You want me to give my phone number out? Is that okay?
Whatever you're comfortable with.
Okay. Yep. My phone number is 480-410-0945. Or you guys can always email me. It's Vanessa@boomerangcapital.com. And we can start a conversation. We can talk. We can chat about your deal. You can ask me all these questions that you have ahead of time. But I am more than happy to work with all of you guys.
Wonderful. Well, thank you so much for your time. And for you students or future students, or for those of you that are watching this on YouTube, these are the sort of conversations that you should be having preemptively, because I think a lot of you are intimidated not only by the process, but where do I get the money and how do I come up with the money and how does the money work? That is the driving question that a lot of would-be flippers and rehabbers ask, and then you don't have these conversations and then never get into the business. So it's not a lack of enthusiasm. I think it's just a lack of education. And that's why it's important that you pick up the phone, reach out to friendly lenders like Vanessa that are wanting to be your partner so you guys can make money together. That's a driving force as well. So again, thank you for your time, Vanessa, and I'll also share your contact information below. Cheers.
Thank you, Tracy. Take care.